common thought about high-yielding dividend stocks is that they're really risky investments in that long term it won't be a sustainable dividend. And while for a lot of cases that is very true, I picked out 3 stocks that I think pay a sustainable dividend based on their business fundamentals and free cash flow. These are stocks that have been on a decline recently and that I own in my own portfolio. Guys, don't take this as financial advice, this is just my opinion. And if you're new here, welcome. My name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. It would mean a lot to me if you guys could subscribe if you find content like this enjoyable or valuable. I make videos about my own portfolio, dividend investing, dividend stocks, stocks that have been on a decline and why, and much more. With all that out of the way, smash the like button, subscribe, turn on post notifications, and of course, roll the intro.
Hello, I like money.
Alright, so for me personally, a great measurement to see if a company's dividend is actually sustainable is to look at the payout ratio of the free cash flow. This varies from business to business. Typically, more established companies like Coca-Cola, Pepsi, they'll pay, a higher payout ratio because they can't reinvest that money intelligently back into their own business, so they just distribute it to shareholders with share buybacks or dividends. But with, technology companies and companies that need to reinvest in themselves right now for future growth potential, they'll typically have a lower payout ratio. Personally, I like to see a payout ratio at about 40%. Anything over 40%, I'll have to do my research on the business and see if it's, sustainable. Obviously, this doesn't count for REITs because they have to pay out 90% of their free cash flow in the form of dividends. But let's move on to the 3 companies that I chose. Guys, as this may come into no surprise to anybody, the first one is going to be Altria, stock ticker MO. Altria has a really high yield, and typically I don't like to invest in companies with yields over like 7%, but for Altria I make a big exception. Altria is typically trading at a really low valuation just because it is a sin stock. But as you guys can see in this chart, Altria has generated large and consistent free cash flow. Altria has been on a big dip recently because they can't sell Juul e-cigarettes in the United States anymore. Year to date, the stock is down 12%. Juul does not make up a big portion of their free cash flow, so this should be no problem to Altria whatsoever. Juul was a really tiny fraction of their revenue, so it really, I think it is a big overreaction by the market. And as I've mentioned previously, I think Juul e-cigarettes are still going to find their way into the United States, and this will only boost international sales. Altria is trading at a cheap PE ratio of 8.5. Now let's take a look at Altria's actual dividend. We can see that Altria has an 8.67% yield, so for every $100 that you invest into Altria, you're getting $8.67 back in the form of a dividend. They have a 76.39% payout ratio. Altria isn't doing huge reinvestments back into their business, and the only reinvestments I would really consider to be, huge for Altria is their investment in the Kronos Group, which is the cannabis group, which could be a really good investment in the long run for them. Altria has good pricing power against inflation, not to mention they also perform share buybacks. Right now might be an amazing time to do some research and pick up some Altria stock on a discount for the long term. Next, we have a company that's been getting killed over the last year, which is 3M. 3M's been getting hurt by lawsuits, inflation, supply chain costs, etc. It's currently trading at $130 near its 52-week low. It's trading at a forward PE of 12 and is down 27% year to date. I believe this presents an opportunity to buy a high-quality company at a low valuation right now with a large dividend. Now, let's take a look at 3M's dividend they pay. Now, you can see that 3M pays a dividend yield of 4.63%. That's pretty juicy if you ask me. They have a 60% payout ratio, and with 3M, they don't really have to reinvest in themselves. They're not in the growth stage of their business anymore, so that's definitely a good thumbs up for me. 3M's dividend growth has been criticized by a lot of dividend investors because it's not up to par these days. But they do already pay a really large dividend, and if they were to grow it, it would just put the dividend at risk, I think. And guys, for the last stock, it's not been any controversy recently, and I haven't talked about it, unfortunately, which has been, of course, the great AT&T. Since the Warner Brothers Discovery split, AT&T's been up year-to-date 8%. This is exactly the stock that I invested in when I initially bought AT&T, which was a slow and consistent dividend grower. Right now, AT&T is currently trading at an 8.14 PE ratio. As you guys probably know, AT&T used to have a really high dividend yield that I would actually argue was pretty sustainable. But since they didn't have the revenue from Warner Brothers Discovery, they'd have to sell off that portion and that would just cause for a huge, really unsustainable dividend just from their telecommunications business. But even with that dividend cut, they still pay a really nice dividend of $1.11 and have a dividend yield of 5.34%. Their payout ratio is also much more sustainable, as I mentioned, as it is at 55.51%. This leaves plenty of room for AT&T to reinvest back into their telecommunications business, creating a more sustainable dividend and shareholder appreciation over the long term. So right now, I think AT&T presents a really unique opportunity for the stock since, nobody's really talking about it much, but it's secretly going up. It will be interesting to see how much AT&T grows their dividend though, as they didn't have the best dividend growth previously. But in conclusion, the new AT&T will be sure to have a strong, consistent, and steady revenue base from their telecommunications business and hopefully pay out dividends for centuries to come. As I mentioned earlier, all these three stocks are just my opinions, and make sure to do your own research. This isn't financial advice. I just love, sharing my perspective about dividend investing. But guys, again, it would mean a lot if you guys could subscribe, turn on those post notifications, smash the like button. We got a lot of cool stuff coming here. I upload every Tuesday and Saturday. I'm going to start uploading some short videos throughout the week too, since I asked the guys on the Discord, if you think that would be interesting, and they all said yes. So we're going to start doing that. Smash the like button, subscribe, turn on post notifications, and of course, do dividend stocks, not drugs. Have a good one.